So in this episode, we're going to talk about why listening to your accountant is often a terrible idea for your business. So stay tuned. We'll break this right open. Alrighty, I think that's me. I'm up. Tony Fraser-Jones here. Welcome to the Profitable Tradie podcast. I'm here with my sidekick, Phil Smith. Phil's the COO here at Profitable Tradie. He's a good man. What are we talking about today, mate?
Well, we're actually talking about something that really grinds my gears, and I'm sure it grinds yours too.
Grinds my gears.
Yeah, make your blood boil. We're talking about why listening to your accountant about your business can be a really terrible idea, because their advice doesn't always help you make money. In fact, often it doesn't. So at best, it might save you a few dollars in the short term, but what we want to do is actually, grow your business, make more money, get more time, more freedom, and look, honestly, your accountant doesn't actually help with that. So we need to tackle the big issues today, and we have a little story to kick off from a couple of our clients.
We like stories, don't we?
We do like stories. I think it's always a good way to get in the zone.
I've got to tell you, if you're listening or watching, we come up with a story for every episode. It's the hardest part of prepping for a podcast is to come up with a story.
Well, actually, sometimes the hardest part is deciding which story because you got so many.
Wow.
So it can go either way, really.
There you
go. Or telling a story that doesn't have enough expletives in it, which...
we don't do expletives here.
Sure. So, hey, look, this story is from a couple of our clients. Look, I won't name them exactly. Let's call them Dip and Perrin. And during COVID, they wanted to get a subsidy for a team member who was isolating, and they did get it, which is cool. But their accountant advised them not to pay an extra $600 a week to top up that subsidy to their employee. And their reason was, hey, what if it blows out to 6 weeks or 8 weeks? You could end up paying a fortune for this. They just have zero idea of how hard it is to get great team members, keep great team members, and what the return on a team member is. So this is a classic example. Like if you got someone who, what if they are isolating for 6 to 8 weeks? Hey, that's one thing. You might end up paying a lot of money and they're not on the tools. But the flip side of that is, if you can actually give them that goodwill and keep on a great team member, then when they come back, they're going to make that money back for you so many times over. Like a good tradesman, qualified, in a van on their own, could be doing $25,000, $30,000 worth of revenue for you per month. And when you look at that, it might be about $300K a year. If you're hitting a 40% GP, it's $120,000 a year of profit that you're getting from their wage. So when you look at it that way, it's like if it costs you a few grand to keep them over that time, and keep them happy and keep them able to afford their expenses and get on with their life.
So they can feed their family and pay their mortgage.
Exactly. Then you keep a great person, you keep them happy. And honestly, the loyalty that's created by you doing that is huge.
Massive.
And then like every year after that, you're making bank on those wages, but the accountant just doesn't see it that way.
Well, that's the
cut
key cost in the short term. That's the key thing. Loyalty is, it's a little bit, what's the word? Fluffy, maybe, for an accountant, and a lot of stuff in business is difficult to pin down to numbers precisely. But there's a backstory to this one as well, Phil. As you know, Dip and Perrin, they had struggled to find employees. Before they joined our program, and they'd managed to hire two or three, I think it was three, good quality employees. Following the processes that we teach them around hiring. So that had been a huge pain point for them.
Yeah.
And they didn't want to lose them.
Exactly. And how much would you pay to get a great employee? Like, what does it cost in your actual going through listing job ads, recruitment process, setting them up with stuff?
It's massive, right?
It's
so
nuts.
for the sake of maybe $600, maybe 6 weeks, what's that, $3,600, it's a cost. We've got to be careful with that cost, said Mr. Accountant.
Oh, honestly, if I hear that again, I'm going to bring a gun to work.
It's not good.
It's not good.
Not good.
There's that old Winston Churchill quote, we was talking about taxation and welfare in this case, but he said, look, you can't stand in a bucket and lift yourself up by the handle. And I think it's the same thing as you can't save your way into profit. It's just not a thing.
Well, you can increase your profit a little bit by saving, but you'll never grow your business.
No, that's right. Exactly. And I mean, like, saving your way into profit is actually just taking some of the resources and infrastructure that you need to continue to get more profit away. So you might get a slight, improvement now, and it feels good in the short term, but it's kind of like weeing in your pants to keep warm. It's a very temporary solution.
Yeah, I mean, when you're out surfing and it's cold in your wetsuit, I've never done it, of course.
Sure.
Never done it, but I hear that it's...
when you're sitting at your desk on a long webinar,
Yeah, anyway. Yeah. So We were going somewhere and I'm completely lost where we're going now, mate.
Well, I think there's a few other big ones that grind my gears with accountants. I hate the old
Mate,
way.
you're kicking off here.
Oh, I'm going to get going. You need to slow me down at some point. But
I thought I was the one who got angry about this stuff.
I hate, and again, look, it's not all accountants.
Yeah, and I think
there are some good ones.
There is, and you don't want to be silly with expenses that you don't need to spend. I mean,
Exactly.
that's kind of obvious, right?
But I mean, like, honestly, Cole, if you looked at your own profit and loss or your income statement right now, like, name one expense you have where you're like, don't need that. Like, honestly, if you want to keep growing your business. Like, I've seen accountants pull apart a profit and loss statement and they're going through line by line. They're like, you know what? You spend a lot on vans. What if you had no vans? What? Or they're like, what's this line here? Is marketing. What is this? $10,000. What a joke. Cut that out.
Yeah. There go your sales for the next 18 months.
Yeah. And they're like, you know what? If you just didn't have a premises, you could work from your kitchen table and save $16,000 a year.
Boom.
And you're thinking, mate, but then I'd have my work at my kitchen table. It'd be madness. I just got away from that.
Imagine the business owner that they'd be cheering. A bit of sound effects with that. Happy days.
Exactly.
I just needed to press that.
Yeah, you always wanted to. But the reality is, if I push one, is you get rid of that premises and businesses in your home. Like, there's a reason you have that expense.
Yeah.
You know, like it's ridiculous. You can't just cut things that you need to try to save a few bucks. Like, these are the things that are going to give you a platform to grow.
That's right. And you can trim things, and if you think of your body, you can trim a bit of fat, but you've got to be really careful you don't start cutting muscle, and that's often what happens with an excessive cost focus, which is what accountants tend to focus on. There's another thing that drives me insane, and this is purely out of self-interest. Obviously, we're a coaching business and we sell coaching programs. If you're listening, you probably should join, but that's another whole story. We've had so many potential clients say to us, oh, my accountant said this wasn't a good idea to get any coaching or help because it costs too much.
Yeah.
That cost thing. Yeah, well, of course, anything that's worthwhile costs.
Exactly.
But there's a difference between cost and investment. And so we should always be looking at return on investment for everything we spend. I think accountants often struggle to understand return on investment because there's some unknown part to it, right?
Yeah.
There's a little bit of uncertainty about what the return might be.
Well, an accountant's looking at it going, 1 + 1 needs to equal 2, but with us, we're like, hey, 1 + 1 equals whatever you want it to be, and they're like, whoa, that doesn't make sense.
100%. And the last thing, the real kicker that just totally slacks me off is we might talk to someone who wants some help with their business, and the accountant says, oh, well, we can do all that for you, which is utter bollocks. Sorry. Because you've been with your accountant for like 10 years or 5 years. If they could, why haven't they done it already? Why haven't they actually offered to help already? Why haven't they done something to help rather than just meet you a couple of times a year and go through your tax?
But Tony, they give great advice. I mean, like, we've seen it time after time that people go in, hey, Mr. Accountant, how did I get on this year? You did great, Jeff. You made more money than last year.
We got a clapping thing here. We should do that.
We should do that. But I think the fact is like, I mean, that's not advice. Like, I mean, more money, what does that mean? Like $1 more, $2 more, $100,000 more? And why? Is it because, I cut my premises and I've been working from my kitchen table? Like, that's not actually growth. Is it because, actually I took a wage for once and that's, so you're like, oh, your income's gone up. It's like, it's because I didn't take anything before, like, it's like, what's actually going on there? And more importantly is it's like, you made more money than last year. It's like, cool, how do I do it again? Oh, yeah, you just make more sales. Okay, thanks. How do I do
advice.
How do I do that?
I reckon making more sales is actually the key to success. We should do that.
Well, it's we should just give that as advice. We could be 100%. Accountants.
That's a deep breath if you're not watching or whatever.
Anyway, I think people get the picture with what we're trying to say here. Yeah. So what's the big problem, man?
I think the problem with accounting, like you said, not all accountants are bad. There are obviously some good ones, but most of them have got no clue about running a business, and that's because they're taught to focus on costs.
Yeah.
That's to count costs. Basically, that's to count beans.
That's it.
So they are bean counters. They're not actually taught how to grow more beans. And that's the essence of business. If you want time, money, and freedom, and you want a great business to enjoy life and spend time with your family, your business needs to grow to give you more, more money, more wealth to buy time back and do the things that you want to do.
Yeah.
And that's about marketing and sales and processes and systems and all that sort of stuff. It's about leadership. It's about vision.
That's it.
So, they're not taught how to make beans. That's a really important difference. Plus, accountants typically just produce financial accounts for tax purposes. That's their job, to figure out how much tax you should pay.
That's the purpose of an accountant.
For 95% of the accountants, that's what they do for you. They figure out what's your net profit before tax, and then you pay tax on that.
Yeah.
And that's pretty much it. And they will work in with your tax office, IRS, IRD, ATO, whatever it is where you're based. But you actually need a different set of accounts to run your business on a day-to-day basis.
That's it.
And that's important. So that's your management accounts. That's a lot of what we go through with our members is how to actually figure out what we're doing on a day-to-day basis, because most accountants don't do that.
No.
And that's what you need to actually improve your profit. There's no point, like trying to drive a car by looking in the rear vision mirror doesn't work, right? And that's what it is for most people when they talk to their accountant. 100%. It's like last year, and if you're like a lot of business owners, you don't get around to doing the accounts for like 4 to 6 months after the end of the financial year because you're busy.
Yeah.
So you get them done, and by the time you sit down with your accountant, it might be 8, 12 months after the year finished, and really it's history.
And honestly, Tony, and again, you might be listening thinking, oh, well, yeah, but I'm doing better than that. I don't just go annually. I see my accountant once a month. I'm like, great, but business is happening every day, man. Like once a month, that's not enough. You need to be on top of this stuff. You can't be relying on your accountant to give you a rear view of a month, especially when you think about things like work in progress. You think about, all different things that are actually at different stages. The end of the calendar month is great for like how much tax you should pay or, things like that, but it's actually not a full picture of what's happening in your business. You can't run your business on a 1 month check-in,
well, and
let alone a year.
Yeah, most people never have a month check-in. They have, possibly a year.
Exactly.
To be honest, 99% of people, if you're watching or listening, you'll probably see your accountant once or twice a year.
Yeah.
And they'll give you, they'll count the beans and tell you how much tax you need to pay. I think the other thing is this something is a bit weird, and if you're listening or watching, you probably know what I mean. For some reason, we tend to elevate people in the professions, accountants, lawyers, doctors as well. I don't know how to say this. I got a brother who's a doctor, and
I know how to say this, but you can do it the nice way.
We tend to think that those people are some kind of higher life form.
Yeah,
I know we're just like tradespeople. We just like use our hands. Like we weren't book smart, which
ridiculous.
is it's ridiculous.
That actually really gets me, man.
It grinds my gears.
That.
Yep.
Like, I think that's one of the biggest things that we're trying to do, right? Is we want to elevate people in trades businesses to a point where you're looked at with just the same sort of reverence as a doctor or a lawyer or an accountant. Reality is, if you have a successful trades business, you make more money than those people.
100%.
Honestly, you also have a handier skill. Honestly, a lot of the time, like how often do you go to the doctor? Like,
that's right.
Hopefully not that often.
Yeah, hopefully.
How often do you need to see a lawyer? Hopefully not that often. How often do you use trade-related things in your house? Do you use your tap, your faucet? Yeah. Do you turn on lights? Yeah. Like there's things in your house all the time that are just completely reliant on having great trades and service businesses at your disposal. You're going to use them more than you'll use doctors and lawyers, honestly. And again, like you should be looked at exactly the same, if not more important, because you provide a more important service, you earn more money, and honestly, you learned just as much stuff. It is really hard to learn to be a great tradesman or a great trades business owner.
Even harder to be a great trades business owner because it's a whole nother set of skills.
And people say, a doctor went to the university for 6-7 years. I'm like, so?
Yeah, and don't get me wrong, they work hard. And,
that's totally.
But but
it's not different, is what I'm saying.
Yeah. And the thing is, for some reason, we tend to place those professions on I don't know, we look up to them, and therefore we just sort of take their advice as, I don't know, like gospel, like it's the truth. But it's your business, and you need to take responsibility for the numbers and the results in your business, and not kind of just let the accountant kind of tell you what to do or, worship at their feet. I think the other thing is, for most business owners, you go and talk with your accountant, and they go through the accounts and they talk about P&L and your this margin and those overheads, and they talk about your balance sheet and your shareholders' current account and intercompany transfers, and then you're just like, like what? And you don't want to obviously seem like you don't know what you're talking about because you feel really awkward, and you kind of just nod and say yeah, but underneath you're like, like what? And so you don't really know, and they just don't seem to explain stuff, and we feel awkward asking as well, which is totally understandable. No one wants to kind of show that they don't understand, because it's a bit of a bit of a thing. So I think that's a big issue as well. And I think the last thing is, we know that building a great culture in your business is massive. And if you talk to an accountant about company culture, they literally start frothing at the mouth. They're like, it's like, that you're talking about the devil. It's like this soft and fluffy stuff, which is not soft and fluffy at all. It's super important, but it's difficult to count. It's not a bean you can just line up and say there's 10 of them and you've got to pay 3 of them as tax.
Yeah, 100%.
So it's very, very different.
And this comes back, I think, for a big one, is that not everything is about the numbers. Like, there's some stuff which is going to have different utility in your business. So it could be about creation or building infrastructure or freeing up your time. Like, you could save heaps of money if you worked 100 hours a week.
Well, in the short term, you'll save heaps of money.
But the fact is like, you can't grow a business on that, and you definitely can't survive. But the fact is like, not everything is about numbers. There are things that don't come through in your profit and loss straight away.
And that's the key point, Phil, right? They don't come through straight away. And the trouble with counting beans is that it tends to be very short term. It's focusing on the profit you make this year.
Yeah.
But we know in business that training people or building relationships or putting in new software that might take a while to get up to speed, or new systems and processes, that can take some time. And look, it is about numbers, because at the end of the day, they will actually improve your numbers, but it may not be this month or next month. It may be in 6 or 8 or 12 months' time. But if you don't do it, it ain't going to happen.
Yeah.
And it's that, not being able to count the bean right now that makes it, that kind of was where the accountants let you down a fair bit.
Mate, the biggest one I see is, you get to that point in your business where you've got a bunch of guys in the field, it could be 5, 6, 7, 8, 9, 10, and you get into a point where you actually just can't run around and keep things in check. You just can't. It's getting too big.
I know where this is going.
You think, you know what, I really need some help. I'm going to invest in an operations manager. And you go to your accountant and you say, I'm going to add an ops manager. And they go, what's that, $100,000 a year?
Overheads.
Overhead?
Woo.
They're not even going to work on the tools? What? No, this is bad. Your profitability is going to go back 100K. But the difference is, if you don't get that operations manager, not only can you not add more tradesmen and continue to grow, but probably you're going to burn out and have to actually cut some tradesmen because you can't actually sustain what you're doing. So adding that overhead gives you a platform to continue to grow your business further than you already have, rather than trying to just keep running on empty and on fumes, which probably actually leads to you decreasing your revenue.
Well, and not only that, your life is not fun. You can't hang out with your family and your kids because you just, you're burnt, you're toast by the time you get home. And life's about actually having fun. Business is about actually creating a life. Yeah. And I think that's something that's very difficult for the bean counter focus to actually understand.
Yeah, and honestly, I've never seen, and this is a big call, but I've never seen someone add an operations manager at that kind of situation and then not get a bunch of growth, because and end up actually completely paying for that salary and some, and actually making more profit than they were making in the first place.
Well, they often make the profit back by better organisation. They improve their margins because they are so busy running around, they're dropping balls all over the show.
Exactly. Efficiency in the field goes up, labour utilisation goes up, your GP improves. You probably pay for it before you even increase sales.
Yeah, client services and clients.
No rework, no callbacks.
Right. Yep.
It's easy, really.
100%. Focus on making the beans, not counting them, brother.
That's it. So what do we do about all this? We've obviously thrown a few blows at accountants here, but what's the practical stuff people can take away? What can we do?
Well, I think the first thing is you've actually got to take responsibility for the financial results in your own business by learning the numbers. Like, don't rely on your accountant to have you back with this, because they haven't. It's not their job, even though you might think it is. So that means you need to be doing a monthly set of accounts. You need to have a monthly profit and loss or income statement, same thing, which shows you how much profit you made. Ideally you're doing a monthly balance sheet so you can see where your receivables and payables are at and how much, liquidity or cash you got in your business. And, if you really want to be on top of things, having a cash flow forecast as well, so you can see how the bank account's going to look over the next 8 to 12 weeks to make sure that, you're good. And if you're not, you can do something about it.
100%.
And it's understanding what all that means. So measuring your key margins, like your gross margin, which is how profitable is the jobs you're doing. Measuring your overhead percentage, where's that sitting? What's your net profit percentage, and how does that sort of benchmark against other people in the industry? That's a lot of what we do. We know the benchmarking figures where you kind of should be hitting, and so we can talk about that with our members, and they can understand. Well, actually, I need to be at 40% GP at the moment. I'm at 32. so I've got some room to move. So it's getting into those things that I think are massive. I think the next thing is tell your accountant what you want. Don't let them railroad you.
Yeah.
And this is like when you set up a profit and loss or an income statement, you have a chart of accounts as kind of all the buckets you put stuff in. So tell the accountant how you want that set up.
Yeah.
You know, it's your business. You do it the way you want to do it.
Yeah.
And that's about getting educated and saying, hey, man, or hey, man, you know, I'm trying to be, that's supposed to be
Hey,
a
man.
gender,
Hey,
like, not
hey,
specific.
lady.
Yeah, yeah.
Whoever.
Or whatever. Let's
Use
not
the right pronouns.
Yeah, that's right. Geez, that's a rabbit hole we avoided.
Yeah, let's not go down there.
Yeah. So you've got to take responsibility for that.
Definitely.
And not let them railroad you.
Yeah.
I think the next thing is find an accountant who's actually got a growth mindset. Yeah, do they have a growth mindset? Are they actually growing a business of their own? Because you know there are some good accountants, 100%. Not many, if any. That's a song, right?
Yeah, sure. But don't break into song just yet, all right?
Okay.
Yeah.
You'd feel a bit of, you know, rhythm
We can
coming
make
on.
this a musical if you want.
No. Yeah, we could sing the whole podcast. That'd be weird. Anyway, weirder than this. So you know, look for someone who's got a growth mindset, someone who has a team, who looks like they're growing, like someone who maybe does a few seminars or whatever, that you know does a bit of other stuff.
Yeah,
is important, and someone who's available and willing to help. I don't know. Accountants seem to make a thing of every time you call them, it costs you like $500.
Yeah.
So you know. Obviously, you need to pay for good advice, and I don't mind paying for good advice, and I think you should pay for good advice. But someone who's actually available, you can talk to when you need them, rather than having to wait 3 or 4 days or weeks or whatever it is to make a time. I think that's important as well.
100%. And like, I just want to go back to that point about finding one that actually has a successful business themselves, because the fact is like you do need an accountant for certain purposes in your business. So they need to be great at that, but also if they're going to give you any advice, like don't take advice from somebody that has no business giving advice because they can't practice what they preach. So I think that's huge. And the growth mindset thing for me, Tony, I mean, that's massive. Like if you got an accountant who's just going to tell you great job every year because you made $1 extra, that's a warning sign. Move on. Find someone who's going to push you.
Yeah, and the growth mindset is someone who actually understands that you need to invest in business to grow. You need to invest your time, and sometimes you need to invest money as well.
That's
it. To get things rolling. I mean, you've only got 2 resources, time and money. Time's not renewable, money is, so sometimes it's better to invest money. But someone who actually understands that you've got to invest and be proactive, and you've got to make beans rather than just count beans.
100%. All right, cool. Well, let's land this plane.
Alrighty. Well, today we've been talking about accountants and why trusting your accountant can be a terrible idea for your trade business. So be really careful of the advice you take from your accountant. And look, it may save you a few pennies in the short term, but it can cost you, a successful business in the long term. Remember, your accountants, they often count the beans, but they don't know how to make the beans.
Hey, I hope you liked the video. Check out all the other videos in the channel and like and subscribe.